Alright, hello everyone, and welcome back to the daily update on my 1000 days challenge. These days I'm around 33, so let's get things started. Alright, so firstly, in terms of the US market wise, we definitely do see red inverted hammer candlestick on the daily chart. But bearing in mind that the single candlestick itself must also take into context of what is happening or what the candlestick took place in terms of the price range itself. So bearing in mind that the single red bearish candlestick is technically bearish, but bearing in mind that as long as we do consolidate near this zone itself, which I did mention, this is the supportive zone itself, between this 4.1K region to 4.15K region itself, is actually a clear signs of consolidation itself. So I'm not technically looking to enter a short unless we break below that. And right now, as you can see on the day itself, we have no break below that, and we're potentially retesting the high and potentially also closing above the recent high as well. So that is definitely a very good sign. In fact, I do think that much more consolidation like a couple more days could take place, especially given that we do have 200 exponential moving average on the daily chart. I think it's a potential key resistance right now. So yeah, consolidating right below it and breaking above would be a potentially good sign in that sense. All right, over if you look in terms for the Nasdaq itself, we are seeing signs of consolidation as well. So even though we did get the second rejective candlestick itself, today we seems to be on the more on the bullish side of things. So similarly, we could potentially push towards the upside to retest this 200 exponential moving average on the daily chart itself. And if a rejection was to happen here, then yes, we could without a doubt turn into much more bearish territory as well. So that's especially the fact that we do see in terms of a very kind of a still inclined kind of high low formation. All right, and then moving in terms of to the ASHR itself, what we do see over here is that we have formed a red in doji kind of a candlestick pattern itself, and we're also near the 0.61 Fibonacci retracement level. So until we distinctively break below that, I still lean towards a potential bounce over here. But of course, right now we actually get below. And I would consider this as a technically below the 0.61 Fibonacci retracement just yet. We're still seeing signs of support over here, and when we increase in volume, we are still not going strongly below it, which is similarly a first good sign. And to add on to that, we also do have KBAC, which is actually extremely much more bullish factor in a sense, because we actually have a green bullish candlestick, even combined with the very bearish news of how potential delisting can happen for tech stock itself in the US market. And in addition to that, the growth of the tech stock in China will definitely be slowing down in the coming years ahead, unless there's a change or shift in terms of the government policy, which in my opinion is quite unlikely as well. But that being said, I still do think that tech sector will continue to grow in terms of China or in terms of globally itself, but without a doubt, the rate of growth would likely be slowed down in the coming years ahead. So yeah, that's something to take in mind. And also we see strong volume confirmation in terms of that. We are also opening and potentially going above that, which is similarly a good sign, but the volume is not as strong. So let's see how things goes. Definitely we do want volume to be very near of that, but it doesn't seem slightly at of this itself. All right, and then finally for Bitcoin itself, we do see a very nice, nice red bearish candlestick itself, which is on the fifth candlestick itself consecutively. But primarily what we do see is that support is potentially coming in the 20 exponential moving average on the daily chart, which is definitely a first good sign that we have a potential bounce. And volume-wise, we're also seeing a decent volume itself. I mean, the volume is also decreasing over here, which goes to show that there's a lack of selling pressure right now. But unfortunately, we're not seeing a pickup in terms of volume over here, which is something that I'm a little bit cautious about, because we do actually want to see in terms of a spike in volume over here. And then potentially we could get a confirmation of a bounce over here, and which could lead us to higher high or at least consolidation over here itself. So the best case scenario that I do see is that we could consolidate over here because volume isn't high. So it still goes to show that this is likely to be consolidation pattern rather than a bounce, strong bounce pickup phase in terms of that. All right, so yeah, so you see over here we got a decent bounce and then we have a continuation. And over here we have a decent bounce, but then we didn't manage to maintain it and then we break below. So generally I do prefer to have a much stronger volume that will give a much clearer confirmation pattern. But yeah, it is what it is. So other than that, on the forward chart, I did enter a long setup over here. So right now I'm in this long setup over here. My first target will definitely be within this 24K region itself. If it does hit over there, I will close again similarly half the position itself. And then I'll be trading the remaining of the stop loss using the 20 exponential moving average on the 4-hourly chart. So I'm in the long for both Bitcoin, Ethereum itself. So yeah, otherwise that's more or less about it. If you guys have any questions, feel free to drop by your comments below. I'll see you guys tomorrow. Take care. Bye-bye.